Is the Eastside real estate market better than it was a year ago? Spoiler alert, yes it is. And we're going to tell you all about that today and why. Hi, I'm Tony Meier with Windermere Real Estate. For 34 years, I've been an avid study of the real estate market, and I record these videos each week so you can make an educated decision, know what the market's doing, and see if whether you want to get involved in it. Before I get into the details, it would really help if you could help YouTube get this video out to others by hitting the like button down below. We're going to be talking about rates for sale and pending, months of inventory, and median price this week. First up is interest rates. Thankfully, we've seen a little bit of reprieve. Rates are coming back down. We are still at the higher end of the range, in the 52-week range, closest being at 7.37 at the highest end, but rates are moving in the right direction. Next up is our active listings. So when I talk about comparison to 1 year ago today, we are down 38% compared to 2022. So that's, real estate's always about supply versus demand, and our supply side of the equation is down massively. So that gives good hope for our marketplace, and we are down slightly from last week, up slightly from last week with a 1% increase. Next is our pendings, the other side of that supply versus demand equation. Our pendings compared to last year are up 15%. We are down a little bit from last week, and I think part of that's going to be just people settling in with interest rates, and also the fact that it is summertime, so we start to lose buyers to vacations. But we are, again, well up from where we were at a year ago. Next up is months of inventory, and this is a massive change compared to where we were a year ago. We are slightly up from last week at 1.27 months. Where we were at a year ago is 2.38, and if you studied our marketplace last year, the first quarter was really the hottest market I had ever worked in my 33 years at the time. And by the time we got to the second quarter of this week last year, the market had changed dramatically. A change we hadn't seen in months or years at that level of change. So just a massive change, and that's one of the reasons why our marketplace is better today, because it's much more stable. It isn't as volatile up or down as what we'd had in the past. Lastly, what we're going to talk about is pricing. So we are off slightly from last week in pricing, but interestingly enough, this is the first video this year where we are basically even with prices last year. And last year hit $1,722,000 in April, and by this week last year we were at $1,401,000. So massive change in prices, but we're now for the first time basically on parallel with a year ago. So if you bought this time a year ago, you're basically even, which is not a bad place to be, as many people who bought earlier were feeling upside down in the process. So, well, one of the things I will predict, this is our second week this month that is below where we closed out in May. So May closed at $1,450,000 on the east side, and now this is our second week in a row that is down below that. So we're likely to see some decline in the median price when we close out June. But does that mean your average house has gone down? Not really, it doesn't. What it means is the median is half above, half below. And what you're really seeing is with rates being higher as the upper end is stalling out. We've seen this earlier this year where there was definitely advantages. And in fact, I've got a video, which I'll link above here, which talks about moving up in this marketplace, but the lower end is definitely moving stronger than the upper end. And I think a lot of the decline in the median price right now is that upper end going quiet again with higher interest rates. So if you like the information we have to share with you, again, hit the like button, leave us a comment down below. If you want to know about the real estate market in general, have any questions that we can help about, please reach out. Otherwise, we'll look forward to talking with you again next week, and take care.